What's up YouTube, and welcome to this follow-up video to the Stock Basics 101 video. I wanted to make sure that I do a follow-up video because the other video came out 20 minutes long, so I want to try to give a 5-minute guide, see how close I'll get to 5 minutes, but want to try to offer just a quick guide to that video so you don't have to watch the long version if you don't want to, or if you're just looking for just a quick overview guide. So let's go ahead and get started. So when you're purchasing a stock, you are purchasing a partial ownership in the company. These are my notes from the previous video, so make sure that we have those up on the screen. So like I said, you're purchasing a partial ownership in the company. For most retail traders, this is going to be a very, very small percentage of the overall company, but nevertheless a small portion of that company, which makes you a partial owner in that company. The reason that companies do this is because they want to raise money without the use of debt. Because debt can go on the balance sheet and can be a hindrance to a company, especially if it comes time to where they don't have enough money to pay for that. So issuing stock is just another way for a company to raise capital that they need to further their business without having to use debt. And the way that they do this is through an initial public offering, or IPO, also known as going public. And basically companies just come out, and it allows them to be traded on the open market, and so that you can purchase them through a broker and just buy and sell them back and forth on the open market. So one of the other things that I talked about in the video, I went into some just basics of, I used Facebook as an example, and as you can see I typed in FB, which is Facebook's symbol. One of the things to understand what those are, it's just a symbol. That's just a quick way to look up a stock, and one of the two different ways to make money in a stock is through either capital gains or dividends. Let's see if I can spell today. Capital gains or dividends. So capital gains is capital appreciation. Basically, if you were to purchase in October here at like 180 at Facebook and were to sell today at 213, you'd be getting some capital appreciation or some capital gains of the money that you made on that stock. So that's one way to make money. That would be a shorter term trade. You can also do longer term. Some people like longer term. As you can see here, they've moved up quite a bit here since 2013, 2014. So that's another strategy as well to make capital gains. But one of the other ways is through dividends. As you can see, Facebook does not offer a dividend. So in the last video, I showed Union Pacific, which is symbol UNP, which offers a dividend. As you can see down here, I'm on finviz.com if you want to look up this site. I use it often, but it just helps give me all the numbers that I need. So it shows here that they offer a 2.18% dividend, which comes out to a $3.88 dividend. One thing to note is that this percentage will change based on the movement of the stock price, because this is the dividend, and if you divide $3.88 by the current stock prices, which is 178, that will give you the dividend payout percentage. And so obviously with the stock price moving up and down, especially around here, it will change that dividend percentage. Wanted to give another resource that I gave in the last video in terms of dividends is I've brought up on the screen here seekingalpha.com, where I looked up Union Pacific, and this shows you that the dividend that they pay is quarterly, meaning 4 times a year. So they pay out that $3.88. If you divide that by 4, that gives you what they pay 4 times a year. And so just one thing to note is that this is an annual, this is what you make annually on the dividend. So this isn't paid out 4 times a year. This is paid out over the course of the year. So it's $3.88 divided by 4, which is paid out in quarterly payments. So just one thing to note with that. But what this Seeking Alpha allows you to do is see the dividend yield over time. So as it's either the dividend's gone up or the stock price has gone up, showing you how that dividend yield has changed. And then also dividend growth, which is important to know, which shows in terms of dollar amount, the dividend going up or down over time, which is another important thing to know. So one of the last things I talked about in the previous video is that you may be wondering, you're like, all right, this is all cool. Stocks are great. How do I buy them? So the way that you purchase them is through a broker. So the broker is essentially just a middleman that connects you to an exchange, and exchanges where you can get the shares from. So the broker is somebody that you have to sign up for, that you have an account with. The ones listed here on this article that I was reading from nerdwallet.com are like Merrill or E-Trade or TD Ameritrade. There's also some popular ones called like Robinhood app that you may see on YouTube, or Charles Schwab. And basically they'll all offer different things. As you can see, some of the fee structures here and some of the different promotions that they have, but generally something that you want to look into if you're looking into a broker, just everything that they offer. But some of the services that a broker will offer, they can keep track of your capital gains, especially for tax season. That's super important, so that you don't have to keep track of every little trade that you make. Keep track of dividends or income that you get from stocks. Some of them will let you short sell, which is betting that a stock will go down so that you can make money when a stock goes down. Some of them will allow you to do that. Some will allow margin trading, which is if you really think that something's going to go up, they'll let you borrow money so that you can amplify your position and ultimately amplify your return, but also amplifying your downside if it goes against you. Some will offer options trading or derivatives. And then just some last few things here. Some will offer education or analysis tools, either for fundamental analysis, technical analysis, stuff like that. So just some basic benefits that they offer, and what to look out for when looking for a broker. One of the things I skipped over here real quick is in terms of Stock Basics 101 is risk. So obviously people who are investing in stocks have a little bit higher risk appetite, and one of the ways they try to get rid of that or manage that is through sometimes like through diversifying. So maybe instead of just investing in like Union Pacific alone, they may invest in 10 other things. So that way, if Union Pacific, as you see, went down here today, it doesn't affect the overall portfolio as much because they're invested in 10 things instead of just investing all the money in just one thing. Another way is through ETFs and mutual funds. The one I showed in the last video was SPY, which is an ETF for the S&P 500, and so they basically, the S&P 500 index is or the ETF mirrors the S&P 500 index, and the S&P 500 index is an index that invests in about 500 of the largest companies in America and is market cap weighted, meaning that the ones with higher market cap are weighted higher in the portfolio. So just another way to diversify. And with ETFs, it allows you to trade it in and out just like a regular stock. So just another way that people use, but also just different trading strategies that I can get into other videos, using things like options to hedge their risk, and just other ways of trading, either short-term or long-term, that can manage either risk or upside. But like I said, I can get into that in other videos when we get real deeper into the details. So thanks for watching. Just want to do a real quick guide to my last video because I noticed it was 20 minutes long. If you liked the video, go ahead and give it a thumbs up. If you want to see more, subscribe. That would be awesome. But also let me know down in the comments section what you thought of this video, or what you thought you might want to learn about that I didn't mention about. That will definitely help me when making future videos. So thanks for watching.